We should expect more economic pain ahead, at least that's according to the Federal Reserve Bank, because yesterday, Jerome Powell gave a speech where he said that inflation is still too high and that the Federal Reserve Bank is going to be committed to fighting inflation by raising interest rates aggressively. And third, that these actions by the Federal Reserve Bank will cause pain to the economy. Yesterday, Jerome Powell, who is the chairman of the Federal Reserve Bank, gave a speech at Jackson Hole in Wyoming because there is this big central bankers convention going on, and he gave his opinions on inflation and the economy. Now, what's interesting is this is an annual event, and this has been happening for a long time. And last year, I just pulled up our market briefs report from last year. Jerome Powell gave an interesting talk because just 1 year ago, he said that inflation is transitory. And then he went on to say that the Federal Reserve Bank is planning on tapering their bond purchases by the end of 2021. And then he said that the Fed might start raising interest rates by the end of 2021. And then he said that there's no real rush because inflation is not that big of a deal. And so they're not worried about inflation. Now, what's interesting is if you fast forward 1 year, he's saying kind of the opposite. He's saying that now fighting inflation is their number one priority, that they don't want to wait too long to fight inflation because if they wait longer, it's going to make the inflation fight even more painful. And now what he's saying that in order to fight the inflation that we're facing right now, the Federal Reserve Bank is going to have to stay aggressive, they're going to have to stay vigilant, and these things are going to cause economic pain. He said that you can expect pain in households, you can expect pain in businesses, and then he said that you can expect the labor market softening, aka you can expect people to lose their jobs because right now you keep saying that the labor market is too tight. So these are the things that you want to pay attention to because between last year and this year at the same event, his tone on inflation and the economy has drastically changed. So let me go into exactly what he said about the economy and inflation this year. Let me start by talking about inflation and then I'll dive into the economy. First, regarding the economy, he said that inflation is going to continue hurting the economy, which is why they need to fight to bring inflation down. He is still committed to bringing inflation down to 2%. Right now, it is still above 8%, around 8.5%. And so he's still committed to bringing inflation down. And the way that they're going to do that is by raising interest rates and by selling off their assets on their balance sheet. Last year, he said that their goal was to stop building up their balance sheet, aka stop printing money by the end of 2021. Well, they didn't stop doing that until the middle part or early middle part of 2022. And now they're trying to get into the swing of selling off the balance sheet. So they thought they would do it by the end of 2021, and now they're really trying to do it. Second, he says that this fight by raising interest rates and by selling off the balance sheet is, quote, more than likely going to soften labor market conditions, aka it's more than likely going to cause more layoffs, it's more than likely going to hurt businesses because as interest rates go up, it makes borrowing money more expensive for these businesses, it makes doing business more difficult, it slows down the economy, so revenues fall, profits fall, and people lose their jobs. So that's what labor market softening means. And third, he says that reducing inflation will, quote, cause some pain to households and businesses, but if we don't do it, it will cause even more pain in the future. I wrote this down as he was talking, I watched it live. And what he's saying is, if we don't put in the pain to fight inflation now, it is going to become even more painful in the future. Now, this is something that I can agree with Jerome Powell, that I 100% agree that if we don't get inflation under control right now, it is going to be significantly more painful to fight it in the future. Now, the next question is, will he actually bring it down to 2%? And right now he's saying that he will. So we'll see what actually happens, but these are the things that you want to pay attention to because as soon as he said these things, traders got worried. Oh man, maybe he's not going to start cutting interest rates right now. Maybe he's not going to start stimulating by the end of 2022. Maybe he will continue raising interest rates. That's going to hurt the economy, that will hurt companies. And that's why we saw the stock market fall as soon as he gave this speech. As soon as he came out and gave this speech, we saw the stock market turn around and immediately start to tank. Now, we are going to be covering this whole story in market briefs in even more depth. So if you want to stay up to date on what's happening, you should join Market Briefs because it is a free resource that I created where every day my team is breaking down what's happening in the inflation market, the global economy, the real estate market, the stock market, and the crypto market into a fun, witty, easy to read email. Even if you don't have a financial background, I promise you are going to understand what's happening in less than 5 minutes every morning, and you're gonna look forward to reading this email every morning. And if you don't like it, well, you can unsubscribe. It's free. So if you want to join Market Briefs for free, I'll put the link to how you can do it down in the description below. This brings me to the economic side of what he's talking about. Because he said two things about the economy right after one another. And as soon as I wrote this down, I starred this because it was so interesting the way that he said it. He said first that the United States economy is clearly slowing. We are seeing softening in the economy, that GDP is slowing down. And right after he said that, he said, but our data shows us that we have strong underlying momentum about the economy. So that was kind of a very interesting contradiction that he said, because first he says the economy is slowing. We can see it, it's clear, but the momentum for the economy is strong. Now, I don't really understand what that means because momentum typically has to go in the direction with which thing you're talking about. Like if the economy is going down, but we have strong momentum, like are you saying the momentum is upwards or momentum is downwards? So that was one thing that he said really interesting about the economy, because it seems like he's still not too worried about the health of the economy yet, which could play a factor into future rate hikes. Because the whole theory right now is he's only willing to raise interest rates so long as the economy is strong and people have jobs. Because if the economy were to turn around, we were to go into a deep recession and people were to lose their jobs and inflation was still high, the consensus amongst a lot of people is that Jerome Powell would not continue to keep raising interest rates. He would not continue to keep this tight monetary stance, that he would start cutting interest rates. So this is where there's a lot of opinions, but again, don't guess about what's going to happen. Make smart fundamental decisions when you are investing, and just keep up to date with what's actually happening instead of just trying to guess and trying to trade on emotions. And then he began talking about future rate hikes because a lot of people have been speculating what's going to come in September. The Federal Reserve Bank is going to meet in September, and most people, pretty much everyone, agrees that they're going to raise interest rates, but the question is how much. And Jerome Powell essentially said that you can expect another unusually large rate hike in September. Remember, the last two rate hikes were 0.75%. Those are both, quote, unusually large. And so he's saying that they might do another one just like that in September. And then he said for October and onwards, they're unclear. It's going to depend on the data. It's going to depend on what's happening with inflation. It's going to depend on what's happening with jobs, what's happening with the economy. So we're unclear on what's going to happen after September. But for September, you can expect higher or a higher interest rate hike. The last thing that he talked about was his referencing of what's happened in the 1970s and comparing that to now. Because up until like yesterday, there had been many comparisons made between the inflation that we saw in the 1970s and the inflation today, because in the 1970s into the early 1980s, we faced very high inflation, and that then became stagflation, where we had a slowing economy and high inflation. But every Federal Reserve Bank member, every government official, every major economist has been denying the whole idea that what we're seeing today is even remotely similar to 1970. They kept saying that we have no stagflation today. But in yesterday's speech, he time and time again talked about the 1970s and the early 1980s. And what he's saying is we don't want to repeat the same mistakes that happened in the 1970s. We don't want to repeat what happened in the early 1980s, because in order to fight the inflation then, the Federal Reserve had to jack up mortgage rates to almost 20%. Interest rates were many times higher than where they were now. Interest rates went up to double-digit rates, almost 20%. And so he's saying that in order to stop that from happening, to prevent that, they want to put in the actions now to prevent inflation from getting out of control. And he said, quote, "We will use our tools to forcefully bring down inflation if we need to avoid the 1970s and the 1980s. And so these are kind of interesting undertones when you compare what he said this year compared to what he said last year. where it's a very different tone. And his goal when it comes to inflation is to bring it down to 2%, because the way that he phrased it was that the expected changes in inflation should be small enough and insignificant enough that they don't matter and they don't enter our household decisions, going back to inflation a few years ago. Now, there's a couple things that I want to really point out about that, because they're kind of hidden in that statement. Because when you're saying that you want inflation to be small enough that people don't notice it and they're not worried about inflation, the good news is then you're not worried about inflation because it's not that big of a deal. The bad news is, well, just like for the last decade, nobody knew what inflation was, or a lot of people didn't know or didn't care what inflation was. And I got on YouTube in 2016, and my first video to go viral was a video I released in, I believe, March 1st or March 2nd of 2016. And the whole premise of that video was that inflation is keeping so many people poor, because now when you save your money in the bank and you get a 0.2% interest rate in the bank, while inflation is 2% a year, you're losing a lot of value on your savings. And so this is where, the whole concept that I'm trying to get is financial education. Just because you can't see it, just because it's insignificant doesn't mean that it doesn't matter. It's something that you want to pay attention to, but I guess we'll worry about that once inflation actually comes down. So we'll worry about that later, but this is what Jerome Powell is saying. If you want to stay up to date with the financial news like this, make sure you join Market Briefs. It's completely free, and I'll put that link for you down in the description below. If you enjoyed this video and you want to see why we might be entering a once-in-a-lifetime opportunity to build wealth and what you can do to capitalize on it, I already made a video covering it, and you can watch it by clicking that button right over there. Thank you for watching, and as always, keep hustling. When the 2020 pandemic happened, that was when the stock market and cryptocurrency was the biggest opportunity. Next time,